Can crypto save America? Exploring Bitcoin's role in solving the US debt crisis. Hey everyone, welcome back to the channel. I'm so glad you're here because today, we will be exploring Bitcoin's role in solving the US debt crisis. Could cryptocurrency be the unlikely hero in America's debt saga? Let's dive into the intriguing possibilities and potential pitfalls of using digital assets to tackle the US national debt. Senator Cynthia Lummis's proposal to establish a national Bitcoin reserve of 1 million BTC has sparked considerable debate. This isn't just about hopping on the crypto bandwagon. It's a strategic vision for bolstering America's financial standing in a rapidly evolving global landscape. Imagine Bitcoin becoming a key component of the US balance sheet. If Bitcoin's value appreciates significantly, the US could strategically liquidate a portion of its holdings to reduce the national debt. This move could also inspire other nations, creating a positive feedback loop that further drives up Bitcoin's price. However, Bitcoin's inherent volatility presents a significant challenge. Relying on such a dynamic asset to manage national debt requires careful consideration and risk management strategies. Furthermore, accumulating 1 million BTC could create budgetary pressures if the assets don't generate corresponding revenue streams. Stablecoins, especially those pegged to the US dollar like USDT and USDC, offer another intriguing avenue. These digital currencies are often backed by US Treasury bonds, effectively channeling fiat currency into the crypto market and absorbing US debt. As more people adopt stablecoins, the demand for Treasury bonds increases, diversifying the pool of investors and reducing reliance on traditional buyers. This could mitigate risks associated with geopolitical instability and ensure a more stable market for US debt. Yet, the growing influence of stablecoins also raises concerns about US control over global capital flows. Integrating these digital assets into the traditional financial system requires a delicate balance to maintain economic sovereignty. Bitcoin's decentralized nature makes it an attractive hedge against sovereign debt default and hyperinflation. It acts as portfolio insurance, offering investors a safe haven in times of economic uncertainty. Unlike traditional assets, Bitcoin is free from counterparty risk and boasts increasing scarcity. This makes it a compelling alternative for those seeking to protect their wealth against potential economic shocks. This perspective highlights Bitcoin's potential as a tool for financial resilience, particularly in a world grappling with increasing economic instability. The rising US debt and the declining dominance of the dollar are intertwined challenges. As the dollar's influence wanes, demand for Treasury securities could decrease, exacerbating the debt crisis. Bitcoin, with its decentralized and borderless nature, offers an alternative. It's free from the political influence of any single nation and provides a provably scarce digital asset for global transactions. In a future where Bitcoin becomes a global reserve asset, we could see a new era of fiscal discipline. Governments might be incentivized to limit spending and prioritize long-term investments, fostering greater economic stability. However, the transition to a Bitcoin-based economy could be disruptive. Careful planning and international cooperation are essential to navigate the potential challenges. Cryptocurrency's volatility remains a significant hurdle. Price swings could undermine its effectiveness as a tool for managing national debt. Clear and comprehensive regulatory frameworks are crucial for integrating cryptocurrencies into the traditional financial system. These frameworks must balance innovation with consumer protection and financial stability. Global coordination is also essential. Aligning digital financial system principles with other countries can help restore US economic influence and foster a more stable global financial landscape. While cryptocurrencies offer intriguing possibilities, they are not a silver bullet. Addressing the US debt crisis requires a comprehensive strategy that includes traditional fiscal policy measures and innovative approaches. Raising revenue through tax reforms, cutting government spending, and fostering economic growth are all essential components. Additionally, exploring options like a balanced budget amendment, entitlement reforms, and a national sales tax could contribute to long-term fiscal stability. Opening borders to encourage immigration and entrepreneurship can also stimulate economic growth and increase consumption. A multifaceted approach is necessary to tackle the complex challenges of the US debt crisis. The potential for cryptocurrency to play a role in resolving the US debt crisis is undeniable, but it requires careful consideration, strategic planning, and a willingness to embrace innovation. We urge crypto investors, financial analysts, US citizens, economists, and policymakers to engage in informed discussions, Share your insights and perspectives on the potential of cryptocurrencies to address the U.S. debt crisis. Advocate for responsible regulation. Support the development of clear and comprehensive regulatory frameworks that foster innovation while protecting consumers and ensuring financial stability. Explore innovative solutions, research and develop new strategies for integrating digital assets into the traditional financial system. Demand fiscal responsibility. Hold our elected officials accountable for making sound financial decisions and implementing policies that promote long-term economic stability. Together, we can explore the potential of cryptocurrencies and other innovative solutions to build a more prosperous and secure future for America.